Having an incident where you're disabled is way more common than needing life insurance. So walk us through sort of short-term, long-term disability from the single through married with kids.
I think when you're single and you're younger and you have a corporate job, a lot of times your employee benefits cover good long term disability and short term disability. And so there's really not a need for you to get an outside policy. Also, short term disability is usually something I recommend that people self insure with like an emergency fund. So, building up back to that earlier discussion of if your expenses are, $10,000 to $15,000 a month, make sure you have 3 to 6 times that amount set aside in a high yield savings account. And that could kick in a short term disability type of emergency. As you go from being single to married with kids, you're maybe progressing more in your career, you're earning more. The long-term disability coverage through work often doesn't account for enough of what you would need to cover your expenses. And so that's the time to maybe shop for a standalone policy. This is especially important for small business owners. I'm a small business owner. I cannot claim long-term disability coverage through my husband's employee benefits, right? So I have a standalone long-term disability policy. And again, you're much more likely to become disabled than you are to pass away unexpectedly. Mm-hmm. So for our family, as the higher earner, that was extremely important. So small business owners who don't have the benefit of employee coverage really have to think about that type of policy.
Well, and then in theory, if you are a early saver and a good saver and disciplined saver, over time, you should have an investment balance to where later in life, you then can turn off the disability insurance or the life insurance because it's just not going to be necessary. Right. That's kind of the goal, right?
That is the goal. As you get more into financial independence, retirement, that's where those things can lapse and you don't really need them anymore. And you can self-insure through accessing money in your investment accounts. Your health savings account could be used for various healthcare expenses, right? If you've been building that up and not touching it and it's growing tax-free, that's a perfect bucket to pull from later in life when you may have higher healthcare expenses.